Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It's Saturday the 26th. We're recording here. My name's Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. Barrie, how are you today?
Hey Ben, I'm doing pretty well.
Rested up after a busy week?
No, I need another couple of days.
Yeah, for a short week, there was a lot of action.
A lot of action for a short week. Yeah.
So let's jump right into it. Bitcoin is our poster child for risk. Um, in my opinion, it's not looking so bullish or robust. Yes, we do have a higher low, but as long as we're below this full square here, which is in the 41,817 area. By the way, all the levels on all the charts that I review and the ones that Barrie covers are up on a spreadsheet, which we post the link to when we post the link to the weekly video. So if you're furiously writing down levels or getting frustrated because you can't hear the levels or didn't get to the level, you can check the spreadsheet and get all these levels. So to me, this is the key spot. You can see this little trend line here is also intersecting it. So if we get through that, I think we're in good shape. We'll have a higher low and we could potentially make some move to the upside. But as long as we're below that level, I think lower prices are what the odds are currently favoring. And we're going to, visit down to this 24,000 level in the near future if we cannot get above this level. Where are you on Bitcoin? I know you've been cautious as well.
I'm pretty much on the same boat.
Mm-hmm.
The key thing is that line. Now we even have more overhead, February little action up there. So, I really expected Bitcoin to take off during the all this
war and inflation and all the different things.
Yeah, and the war, especially when gold took off around that time. I expected Bitcoin to take off, but it was really it really didn't. So to me, it's probably more bearish than I imagined. But we'll have to see. But technically, let's just wait to see what happens. It's between two lines, and we need to move out of that one way or the other. So we're waiting for that.
It was sort of the revenge of the old school this week on Twitter. All the gold guys were crowing and happy, and all the Bitcoin guys were quiet.
Yeah. Well, the gold guys needed it. They needed a turn after how many years is it?
Yeah, it's true. It's been a few years that gold has been almost 2 years now. Gold's been going sideways, but it's. Mm-hmm. I mean, I think you find out in times of trouble and bear markets, what really is a store of value, what really is high quality, what really is a safe haven. Until then, you could say anything could be a safe haven, and you just don't know until, the bullets start flying, what's going to hold up and what's not. And Bitcoin did not hold up. It did not prove to be a store of value. It did not prove to be a hedge against inflation. Mm-hmm. It did not prove to be a safe haven, at least so far. In this turmoil, it's basically just shown itself to be a high volatility asset. Mm-hmm. And in times of panic and fear, high volatility assets get sold. And that's what we're seeing in Bitcoin. So it may change, and the character of it may change over time. But right now, that's the assessment. So 41.8 is the line in the sand. We get above that, it's a different ball game. Otherwise, it could be this all over again up here, where we got stuck under here and hung around for almost a month, and then the rug got pulled. So the longer amount of time we spend below this line, the more the risk of another leg down coming. So that's where we are on Bitcoin. Let me throw it over to you with the big five. It was a busy week, lots of big moves. So let's see where we are. There's the US daily.
Kept everybody busy last week.
Sure did. Boy, does that look like it's setting up for a third drive down too, doesn't it?
Well, these are like whiplash moves, eh?
Yeah.
Thursday and Friday anyway.
No question.
Let's catch up on the story. Let me make a little bit zoom in on this. We left off last week talking about 43.70, being able to hold above that. And if it doesn't, we were looking for some weakness. Clearly, we tried early on to get there. We couldn't, we failed. And that was basically started the entire down leg. And Monday we stopped at the ABCD that we had put on last week. And then all the news came out and just got weaker and went all the way down into Thursday. So 43.70 was the level we were keying off of last week. A couple of
Based
things
on the close, it looks like it's still operative.
Yeah, came right back there. It's that's like the little zone. But of course, the dynamics change every week. Going into next week, well, what happened last week was we came very close to finishing off this, getting up this support level at 90 degrees down. And that support is at around 40.79, 40.80. It's right in that range. Now, if we hit that perfectly, that would have been great. I was really watching that to see if we'd get there, but we didn't get there. What we did get was sort of we got closer to the 45 days down in time. And that's close enough. We're fairly close to that, the 45 days down. The other thing was, if you look at the square of 60 calendar days, we were down 60 calendar days, which is, of course, 1/3 of the square of 90. So if you go back to this, we were close to 90 by 60, right around that low. It's close. So we have to be cautious here because we were so close to finishing off the square. That said, because it didn't quite finish it off, and we're in a sort of a heavy down leg, and we took out the previous low, we have some new numbers we have to look at to keep track of what's going to happen. It's a little messy around these lows, and especially kind of panic lows. So we have to really watch our levels to see how price will balance out next week. And the key level to watch, I'm going to take out 43.70 and I'm going to move that to 43.15. And so we're going to look to see if the market can stay above that. And if we can, any kind of retracement that can hold above 43.15, I think we'll be in fairly good shape. As for support for next week, it's really 42.75 is really the level I'm looking at. Now, meaning maximum support. If we can hold about 43.15, great. It's basically we're back in the business by the dip kind of environment. We're back in business, and then we can look for more upside. If we can hold about 43.15, if we can't, then really the most amount of counter trend pullback should be around 42.75. It should hold right around there, give or take, say 5 points or so. So those two levels we're watching for counter trends to hold or not. Those are the two key levels. On the upside, the most important level is this half a square, especially since we got almost down to here, down to the end of the square. I'm expecting that 50% of the square to be fairly heavy resistance. And that being the case, I think 44.50 is probably a fair level to watch. Because of the news and extra volatility, it's possible we, can go about another 10 points or so, but it's in that range. That's the ballpark. That's the area we want to watch. So I'll lower our square just to isolate that. And that's basically my take on the S&P. We're looking for resistance around 44.50. Any kind of counter trend early in the week, we're looking for support around 43.15. If we can bounce off of that level and sort of gain some ground, I think there's more upside momentum left in that leg post pullback. If 43.15 goes, the second place to look would be 42.75 and see if we can hold that area and bounce. If 42.75 goes, I think we're going to go back and make a new low and finish up the 90 degrees down. And that area is around 40.77. So let's say 40.75. So that's the low end of the range for next week.
So Barry, how do you see this, like this bounce and reversal we got on Thursday? Do you see it as a counter trend? Do you see it as, okay, we got a good low in place? Where are you probability wise?
I'm looking at it as a counter trend.
Mm-hmm.
I don't feel like it really finished it. Although, I mean, this is my opinion. Okay, so
Yeah,
I
sure.
feel like it's a counter trend. Although I want to, you have to obviously look at both sides. So if I'm correct about the counter trend, then I'm expecting the 4450 area to hold. So we have some upside left, and then we roll over and come back to test these. And failing 4275, we're probably going to go down to 4075 or so, at least finish off that cycle.
Right.
Yeah. And I don't, far as the leg goes, I don't think we finished it, but I'll be corrected if we take out 4450, fine. I didn't get the low, but good enough. We'll work it off from the middle of the square.
Right. I mean, it's all dependent on price, but I agree with you. I think we're doing a counter trend, and with the cycles that in my work that we have coming up in March, it looks rough. I mean, price is going to be the final arbiter, but we'll see. We'll see what happens.
Yeah. So here we have 60 down. 60 by on a calendar day chart. So that's so what you're saying has some ground. Yeah, it's possible we finish something, but I'd like to see some proof. And my proof is that first counter trend. So I'd like to see if that's low, then fine. Then one of these should hold.
Right.
And what I can stand by is if 4275 goes, then I'm pretty sure we're going to go back and test this 4075 area. And if that doesn't work, then we're probably going lower. So that, opening up all of this. So for now, it's really 4475, 4275 is sort of the big bracket that I'm looking at. And looking at the weekly, this is, we talked about.
Very interesting.
Yeah. And I remember I put these little squares on a few weeks ago. And what I said was, normal pullback, normal correction should be within the box. And at the time, remember, we took off without quite completing it. And it was only a 1 week, 1 bar pullback. And I said, hey, that doesn't look right. It looks really weak. And we're probably going to go back and test this. And sure enough, 3 weeks later, we come back and test it. And we took it out by a little bit. Not a big deal. You figured the extra volatility was that extra run. So I'm okay with that. Now, when you said, hey, does it feel like it finished something? Well, this is why. Yeah, it does feel like it finished something because that leg is, on a psychological level, that was like a level that we're used to, kind of a correction that we're used to, because we've had two of them prior. This was double that, and this was a very similar one, and I'm sure there are plenty of halves. So that this sort of the range is normal. So it's possible. Well, if it's possible, if it's going to do it, then I'd like to see some proof. So that's
and we were talking before the show, and I told you the message I got from the charts this week was that something did finish on the 24th at the low, but it's not in every market. So I don't think it's sort of one of our global cycle type overall cycles that affect everything. It seems like it maybe is because in the markets I'm looking at, it looks to be specific to the war trade. Now, what that means for the war going forward or the conflict in Ukraine, I have no idea. Is a settlement coming or something? But that first phase of the war trade seems to be done, and maybe that's what gives us this counter trend into March. We'll see.
Yeah, that's a very good possibility. So looking at the square 52, we talked about, big resistance coming up around 2 squares up, 156 degrees, which we got. So we got roughly a half a square, actually a little bit more correction. The question now is that, are we done here on a weekly basis on the bigger picture? And I feel like probably not.
Right.
Even though we have this square, I'm also looking at other things. So, it would be much better if I saw it come down to, let's say, 38.50, for example.
Exactly.
Well, Ben, there you go. There's your target we're talking about last
Right.
week.
That's the target we've been discussing. Yep.
Right. So 38.50 area is definitely fair. So 38.50, 4,200 is also an important level from 2009 low. So we'll see. Basis weekly, I think, we really need to clear 44.75 basis weekly in order to sort of flip the balance to the other side.
Mm-hmm.
So I'll put that on there. So we got two levels, 44.75 and 42, 4,000 on the downside, roughly,
Right.
and the full square being around 38.50.
Mm-hmm.
So we're just mapping it out. We don't know either, but I do know 44.50 is important, and I know these two levels are very key on any kind of a retracement. And if everything blows up, 40.75, if that goes, then
Off to the races to the next square.
the races again. We got one more leg down, and it's not unusual. We have one drive,
Mm-hmm.
two drives, and we could have a third drive. It's not unusual to have three drives down to finish up kind of a messy period. So we're here, and the third drive, of course, has the most amount of panic. So it's possible that we go, blow a little lower, right down into below 40.75. All right,
And it's interesting. It's all set up for March too, which coincides with the cycles.
It's set up for March. I think second part of March is going to be
rough.
Could be rough. Yeah, it looks like
Mm-hmm.
it could be a rough period. Yeah. Of course, all of March could be rough period. So,
right.
we'll see how it goes.
Yeah.
Far as cycles goes, calendar days, we went 60 down into last Friday. It's a fairly good count, and I really like the 90 is usually where the S&P really finishes.
Look at that, late March.
So the 90 is really March 28th.
Would it be interesting if we did January 24th low, February 24th low, March 24th low?
Well, that would be a good setup, because that'd be nice, clean 3 drives down.
Yeah.
And perfectly, paced.
Mm-hmm.
So let's keep that in mind.
Let's see.
Moving on to bonds. Less action than I thought. Not imagined we'd have.
Yeah.
And we're in the same, same area. Again, my number is really 153.19, or you can say 153.20 is really the level to hold above. And you can see clearly, even with all this potential risk going on, you can see a lot of the balance was not a lot, all of the balance, most of the balance of the week was below 153.19. And a couple of times we blew above that, it sold off and really couldn't hold above it. So this is where we call it to hold above, and it failed. So because of that, I'm still bearish on bonds. I think we ought to get down to this 149 level, and at least from a square perspective, and we could go lower, but let's see, 149 could hold. Now that whole 149 idea, this finishing up the square, of course, we'll have to wait if the market takes out and holds about 159.20 or 19. That's my take on bonds short term.
It's possible we could do an ABC up too and just be corrective and then start the down again, huh?
That's possible. Yeah. I mean, I would like that.
Mm-hmm. Be a nice setup.
That would be a nice setup to trade if it happened that way. So, I mean, if it's going right in, that would be, I wouldn't mind that at all.
Right. Mm-hmm.
But either way, we have to keep track of, put a placeholder here. So 153.19 or 19 is that level.
Mm-hmm.
And looking at the weekly, you can see we're kind of, struggling to hold above the 3/4 level, 3/4 square.
Mm-hmm.
And the reason I'm a little bit, a little bearish is, we got this entire rest of the square to cover. If we're actually in a downtrend, it looks like we are. We did a high to high and going into 90. So it doesn't look complete. And unless proven otherwise. And that's why the 153.19 is an early trigger level to say, hey, the balance shifted. So short term, let's look at the other upside. And if it can't get above that and hold above, then I think this weekly trend line really is talking, and it's holding fairly well. Let's see how that works out. And we do have more stuff. Doesn't mean we can't do that A, B, C, D, go up here and test it and fail again. It'd be nice if that happens.
Mhm.
But just remember, we have more downside here on the chart. Looking at crude. Well, crude 97,
You got your 97.
got the 97 in a flash. So
Yeah.
got the 97 and we reversed immediately. And the reason this is important is if we go back to the weekly charts, and I've been talking about this 90 square for a while, and you can see we hit the target. Yep. And that's really where the 97 came from. So as far as I'm concerned, crude is done one way or the other technically. Now I'll have to just stick with that because that's all I know.
Right.
Like I say, unless otherwise we manage to get above 97 and hold it, unlike this quick sort of a search and destroy mission up here. Other than that, I think 97 should basically cap it for now. And I would expect it to probably hold above. Let's go back to the daily chart and look. So 82 is the other key level to look at. 87 was one that we used earlier, but I'm going to fall back to the half a square, which is 85. I'm guessing we're going to hold above 85. That's a half a square of 90. And it seems like a good price, and we have structure there to support that. What else did I want to say about it? Well, for now, I'm expecting it to hold above 85. If we can sort of hold above 91 next week, well, I'd say might be a little bit more fuel left to go back and maybe test the high. Mm-hmm. And it's possible we go up and, finish up the 90 square on the daily basis, which is around 107, which means we would have gone above the 90 square on a weekly basis. I mean, it could happen, but not likely. For now,
with the headlines, it's possible. That's the whole
with
thing.
The headlines. Oh God, all the variables out there. It's certainly possible. That's why I want to kind of clear it up. And we do have 107 there, but for that to be probable, we'd probably have to hold about 91 for a few days, which we've done, right? So you want to watch that. So the next level to hold above would be 97, and that would give us another $10 up. Otherwise, if it's just going to hang around here for now, 85 would be the key level to watch for it to still be bullish. I mean, I don't think oil is done necessarily forever. Right.
It may just mark time and chop, and who the hell knows, right?
Right. So, I mean, we're just talking for next week. So it's the key thing is, we're expecting to hold above 85 and below 97, and more bullish above 91 and less bullish below 91. That's how I'm going to bracket this. Moving on to gold. Well, another winner for all the gold bugs got paid off.
Hopefully they were fast on the trigger.
If they were fast on the trigger. And man, we were like on the ball, like,
oh my God, if we didn't sell that, we would have been kicking ourselves.
So we were faster than those Russian missiles, man. We were boom. All right. Why were we quick on the trigger? Because, well, for one thing, it was we went back and checked the middle of the fork, very important resistance. And if it breaks it, it really needs to hold above. We really didn't have a chance to do that. The other thing was, 2000 was a big target. And getting into the quarter square was clear. It was 1974. We talked about that. It was somewhere between 1974 and 2000 was the target. So we got to the minimum level. Okay, fine. That's I think that's I think gold might be done for now. Here's the other thing I want to look at. And looking at the square of 72, we did get up to 72 fairly cleanly. We do have time in there.
Yeah, price and time right there.
Yeah, price and time there. So that squared out.
Mm-hmm.
Now, I don't think gold is done, and that's why we really want to watch these levels. 1887 is still a key level. And looks like we're, if you really look a little closer, you can see all these, last few days, we're holding right above that. And this 1887 we've had for a while. Now, moving forward, I just want to go back to the weekly chart and take a look. So this is where we left off last week. So this 1881, figure 1880 is we're 2 squares up on a weekly chart. It's 104 degrees up. And there's the triangle we've been watching for it to break. And as long as I can remember, we've been talking about these higher lows and how it's going to break out and the whole story. And well, we got the breakout. And the key now is to see, well, is it a breakout that we're going to with follow through, or is it a breakout that's sort of fizzle out like these other ones? Well, we're watching 1880. I think that's a key level to see if gold can hold that. If it can't, it might come back into the fold and consolidate and push again.
Yep.
But for now, 1880 is a key level to watch as far as support goes for next week. And if it breaks that, then I think gold might be resting for a while. It's not a short by any means, but
no,
certainly resting for a bit. And the other levels, you guys probably know, it's the same levels we've been watching. We have that 81 basis weekly. We have 87 here, and we have 1832 as key support for any kind of a pullback. So it's still the same. I'm guessing we should, if this breakout is anything half real, we should definitely hold above 1830. Yeah. And if there's a lot of tension still left in the markets, then 1881 from the level from that weekly chart should be key support. You have anything to add to that, Ben?
No, I'm going to cover gold too, but
Okay.
I'm on the same page as you. It's sort of all these war trades kind of spiked, and then now they're going to be consolidating for a little bit. But there's longer term, they still look good, and that includes gold.
Right. And looking at the dollar, well, picking up from last week, we talked about how holding about this 95 is key. And, we've always had this 97 area up here as resistance. So, we're back in there and reverse and again, but now we're back into the same sort of a chop zone. And the trades really have to come from those two extremes, right? Either you have to start at 97 and work it down, or start at the 95 area and work it up. So I think we're trapped between those two levels again until we can hold above 97, which we haven't been able to do.
Yeah, that box really captures the price action well.
Yeah, the box has been working fairly well ever since we took out 95, right? We're above the half square. And so our basic working premise of theory is that long as it's above the half square, the pushes are to the upside and is bullish, and we ought to make higher lows and higher highs. Other than this sort of the flush or false break, we held in there 99% of the time. So
yep.
And again, looking for the dollar to be strong and expecting this new trend line to hold for now. Yeah. Take a look at the weekly dollar. Not much. We talked about, this 97, 98 area being the next sort of the resistance on the square. That's where we bounced off of exactly, which is right there. And I should probably get rid of this. The fork served us well for a while, but I think we're done with that. We'll set up a new one next week. There we go. We'll see how that goes.
Mhm.
Yeah, for now, we talked about, I think the daily levels would work, and dollar's in a good, strong position, especially above 95. That's that. And the euro daily. So we have the mirror box. We're back in the box again,
Yep.
where we've been trading for, 99% of the time, and not much doing here unless we get above it or we break below.
Mhm.
And looking at the weekly euro, again, here's the box, and most of the action's trapped inside and doesn't seem to stay much below that level. Although,
Looks like a wave 4,
yeah, and I was going to say, we're, don't let that, put you to sleep, because we are making lower highs and lower lows.
No question.
And last week we just made a new lower low, so the trend is it's very weak. Euro's weak, no question about it,
Mhm.
and could get weaker. Well, that's my coverage for this week.
Awesome. Good job.
Thanks, Ben. And let me put it back to you. Cover the commodities and take a look.
It's nice to have the squares and the levels even when the volatility is off the charts, isn't it? How would you trade without it?
Well, I couldn't.
Yeah. Yep.
Yeah, they're helpful. At least it's always nice to frame something that has no rules and no boundaries.
Mm-hmm.
So I think that's what squares gives you a way to frame things in a way that's easy to handle.
Yeah, very, very good looks.
Mm-hmm. Let me put it back to you then.
Okay. Here we've got NQs. It's been the weakest part of the equity markets that I follow, compared to the ES. This has been sort of a leader to the downside.
Mm-hmm.
The story for those that are catching up is, we made a high and then we just kept getting caught under this resistance, poked up a little bit and then gave it up. And since it's given it up, we've just seen a series of lower highs, lower lows. And again, similar to the pattern you saw when Barrie was going over the ES, we've got one drive here, second drive here. Do we come up and make another lower high and take a third drive? I think probabilities favor that. For now, the key level on, while we're on this counter trend is this, right around 14,000 area. If we get back below 14,000, we're most likely, heading down, to touch the full square around 12,700. So,
and that could be the, potentially the end of, that could be a end of the bigger leg.
mm-hmm.
If we get there in time, right? At the right time, we can get down there.
Absolutely. So we're watching the next resistance. You got some trend line resistance we're going to run into here, but the bigger resistance is this half square. And the half square is around the, call it 15,000 area.
Mm-hmm.
And you can see when you look left, we've got, previous lows on the way up. So it's going to be pretty strong resistance there. If we get there, it'll be telling how it handles, this here, this whole structure here and here.
A little bit like that 4450 in the S&P.
That's right. It's going to be a real test. Not only are you going to have this whole mess in here, but you got this stuff here and this stuff here. So right now, we're treating this as a counter trend. You got the levels to watch. They're on the spreadsheet. So, watch it and see it. I think it's weak. I think we've got more work on the downside to do, but we'll see how this counter trend plays out in both time and price. Now, one of the things that last week we were talking about a war trade that, was visible in the markets and the charts leading up to the invasion in Ukraine that we saw. And it involved, bonds, the grains, gold, silver, crude oil, the equity markets. They were all trading in anticipation of this battle breaking out. Well, the interesting thing is that once the battle did break out this week officially, And a lot of these charts and a lot of these markets, reversed sharply. We've already covered ES with Barrie. I just covered NQs. You saw we spiked down there on the day of the announcement and have reversed in a counter trend. I think we're seeing something similar in the next few charts that we'll review, and I wanted to quickly go over them with you. Here's wheat. We were very bullish on wheat. We got this crazy move higher, because the Ukraine is the world's, fifth largest exporter of wheat and grain. So obviously, if that was going to be a major battle on their turf, there could be some issues with the supply out of there. Well, we got the spike up. You can see it paused here at this half square, and then we sharply reversed on Friday after making that high. So this is not a short-term call on, this is a short-term call on wheat and these other markets. I'm still very bullish long-term. Matter of fact, we're going to record our monthly show next week, and you'll see, why we're still very bullish on these things long-term. Just on a short-term basis, I think this marked sort of a exhaustion high and a peak, and maybe we're going to chop around here in a triangle. Maybe we're going to do an ABC. Maybe we're just going to go sideways. Who knows? It just looks like this sort of peaked and cycle ended. Something ended here at the top, and so trading these things now, you want to step aside. You want to let the pattern play out. Let's see how we handle certain support areas. Right here, obviously, there's support, the half square, and structural support. We closed in that, with an eighth of that range. So it may stop here. It may pull all the way back to the full square and then sit on top of this structure. So we just have to watch. But I wanted to follow up on the wheat from last week and the last few weeks we've been talking about. Let's check out some of the other grains so you can sort of see the same pattern unfolding in these things. Here's corn. Had this beautiful run up that we grabbed a piece of that. Didn't grab this last spike, but you can see what happened. Essentially, sort of the run up to the war during last week, we kind of retraced the whole thing and we pulled right back to where we were, which was those highs before we started seeing the big move higher on expectations of war. We stopped on support. Still very bullish longer term. I'm just interested in seeing how this is going to play out. It may end up being some sort of triangle. It may end up being an ABC. We rock it back up and come back down and make an ABC. So we're going to watch how that plays out, because I'm still bullish and I want to look and see if we can get a nice setup for a re-entry here on corn. Any thoughts on corn or wheat so far, Barrie?
I feel the same. I think, if you look at the weekly charts, monthlies, we're still straight up, and this looks like a, end of a third type of a correction. So just wait and see. Let the next leg play out, next phase play out.
Right. Here's another view of a different one. Beans. Beans is amazing. We did a, upper part of the square to lower part of the square move in 2 days.
2 days.
I mean, absolutely phenomenal. Look at the move up here. Again, we caught some of this. We didn't catch this last sort of war-related part. But you can see how well this commodity, respects these squares and plays with these squares, sort of ping-ponging its way up the chart. Still bullish on this long term, just thinking something ended up here at the spot where it should. We've come down to support. Do we bounce around in here for a while? Do we come down and, even if it came down to here, it would still be bullish, right? Because you're sitting on top of this whole structure in here. So very bullish long-term on beans, just showing you an example of what we feel is sort of completion here after this run. I know you were on beans before too, Barrie. Where are you on them now?
I think beans, wheat, all of it, long-term bullish, but this has the feel of like a third finishing up, and they take all the money back after that. So you want to be really, you want to you want to hold on to your money at this point and wait till we have clarity on the next leg. For now, you really want to focus on where the support is on this counter trend.
Absolutely. And especially if you're in options, man, those fourth waves are killer.
Yeah, you don't want to.
They just suck the premium right out of the option. So anyway, still very bullish on the grains, just showing you sort of the completion of a move, something we tracked from the lows late last year and talked about on multiple shows. You can go back and check the videos. We've been talking about them on the way up, and sort of here's how you try and figure out, how to get in and then how to get out once you see that kind of move at the end. Here's another one we wanted to take a look at, another one that sort of had the same pattern of this spike into the start of the war and a pullback, but gold is still very, very bullish. We're just coming out of this 18-month, 20-month sort of sideways correction that we saw from the highs. We had a nice move up. It got sold. We're getting stuck below the half square. But the key thing here that I want to watch, the low so far is sitting on top of the highs from November. That's bullish. And if we actually pull back, and Barrie mentioned a similar level, can we hold this 1835 area? If we hold the 1835, I think it's up and away. I do like gold longer term. I think it's setting up for much higher prices. Again, just feel like, wanted to point out that, this move looks like it ended. We're going to go into some sort of corrective. We don't know how it's going to correct, but we're watching it again and be looking for another entry here. Anything to add on gold? I know you covered it pretty extensively.
I would say we really have to isolate that counter trend here, this counter trend coming up, and that'll tell us the longer term health. So, the shallower the counter trend, the better it is. And your full square down is still, I think, is in good territory. What's the level again on that?
That's 1835.
Yeah, so it's around that area. I think it's very good. And if we can get above the half square, well, that opens up a lot to the upside.
Exactly. And you can see on this daily, there's a lot of air above that half square if we can sit on top of that.
But it took a lot for gold to get up there.
Yeah, it did. A lot of effort. So now maybe it has to build up, burn off some time, and then we should get going again. And we'll pick it up, on a weekly basis when we see it. When we see it setting up for the next move, we'll for sure have it on the show and bring it to everyone's attention.
And the degree of the correction will tell us the strength.
Absolutely. Let's check gold's little brother. That also did a similar move. I've drawn in the ABC up. It did. It looks like we completed an ABC up there. Again, we poked above the half square, couldn't stay above it. But I think it's in a very strong position. I think this series of higher lows and higher highs continues. If we get another higher low here that can sit on top of this full square, that'll give us the sort of the launch codes for the next move up. So I'm very bullish on silver. Again, just wanted to point out, you look at these spikes and you see this sort of action. It gives you a clue that this leg or this portion of the move is finished, and now we're going to transition into something else. So we're going to have to see what that something else is. As long as we hold the levels, it'll be bullish. The key on the upside is this half square. If we can close above that 25, call it 25 level, that's sort of the all clear for higher prices in silver. What are your thoughts on silver?
Well, pretty much the same. This might be a slow train, but it's going in the right direction, and I'm patient about it. Mm-hmm. So again, I think the overall trend is still intact. It's just a matter of watching the pullbacks and making sure it's holding key support. Yeah,
a lot like gold, it has that pattern I like to see, which is a translation of momentum, right? As long as you see these higher lows and higher highs, this is where momentum starts kicking in. Mm-hmm. And so if we get one more, and then the next higher high could be that third wave blast as momentum really kicks in. But this is the pattern, right? It goes sideways and then it starts going a little higher, little higher low, another little higher low, another little higher, and then it's gone.
Mhm.
And so that's why we keep these things on the radar and keep watching them. I think silver is demonstrating that type of pattern. Last one we want to look at is crude oil. Barrie covered crude. I want to give you another sort of view here. We got time and price at this high on this spike. We couldn't hold above this full square, and now we've pulled back in here. I think this sort of leg on crude is done. You know, you could even count 5 waves, 1, 2, 3, call this a messy 4, and then a spike 5. But the next move out of here, provided we hold, you know, I give you a little range. I'd say from here, which is around 88.50 to here, which is around 85.50. If we can hold in this area on any pullbacks, crude's just going to be winding up for the next move higher. And of course, as we talked about when you were looking at crude, Barrie, you got the headline risk that again could send it up where we, you know, do get above this square, can sit on top of it, you know, and move up, you know, over 100. And I think 115 is like the next square up here.
Yeah.
107, around 107 here.
Yep.
So I think the potential is there. You know, you can see we're holding this trend line even on the low, this spike low here, and then this another hit here. As long as this thing holds, it could just wind up in here for a few days or even a few weeks, and then we could go. So still bullish on crude. I think we got to wait for the setup, wait for a good risk reward spot, like could be here in that 88 area. Like, you know, if the setup's there and everything's in place, it might not be a bad buy there. So still bullish on crude. I think the fear war trade is done, you know, as we demonstrated with these different markets we showed you. Now it's back to, you know, what's happening fundamentally with the particular commodity. The grains look like they're going to be in short supply. Crude looks like it's going to be in short supply, and gold and silver look like there's going to be increased demand there. You know, for whatever fundamental reasons people have, they're going to want to own gold and silver. So the idea we try to do on the show is we present actionable ideas and we show you kind of where we are in a move and how a setup's coming. And this show for me was more about, you know, looking at setups where there's nothing to just sort of jump in and buy this week, but there are things that need to be watched for proper setups and good entries, because the monthlies and the bigger picture on them is still very, very bullish. Anything else you want to add before we sign off this week, Barrie? Things you're watching?
Just to ask the people if they like our work, you know, to support us by just simply liking it and maybe sharing it with like-minded traders out there, and sharing it, liking it, maybe comments if you guys have any good ideas or something we could do to make it better, right?
Yeah, one of the things we did do, and I want to remind people, we did what we called a pandemic special where we highlighted a couple individual stocks that were sort of telling a story. You should, if you haven't seen that video, you should check it out. And if you make some comments to us that you like that or you want those kinds of things, we can do, you know, more sort of shorter special videos on individual issues that tell a compelling story.
Mm-hmm.
Anyway, let's see what happens this week. We head into March. We have very, very important major cycles hitting. So to say that we're on our toes would be saying the least right now, because things are going to continue being very volatile, and the translation of that with good levels is plenty of opportunity. So I'm excited. I'm going to rest up, as you said, today and tomorrow, and get ready to roll, because it's going to be a heck of a week.
All right. Good job, Bit.
Thanks, Barrie. Talk soon.
Okay. Take care.
Bye.